It's been a while since I've done a multi-market update, so I think I'll do that this weekend. I'm still seeing uh, a lot of perma bears um, calling this a bear market rally. I mean, these realistically, these people have been bearish for the last 10 years. They've managed to miss the first half of a secular bull market, and I suspect they will probably continue to miss this bull market until the very end when it finally goes parabolic. I've said this before, and I'll say it again that it's not simply monetary policy that is driving this bull market. It is technological advance and another step up for humanity. The last secular bull market was driven by the personal computer and the internet. This one is being driven by multiple um, technologies. Biotech, I think, is a big one. Artificial intelligence, another big technological advances occurring there. Nanotechnology, robotics, um, autonomous transportation, clean energy, just a whole litany of new technologies coming online that are going to drive um, you know, another advance in the quality of life on planet Earth. So, anyway, let's get on to the update. So, in the stock market, um, I've been, uh, you know, for months now, I've been telling people I didn't think we were going to retest this bottom. I still don't think we are. However, we're starting to run out of potential here. We've already more or less tested these all-time highs. We're within 4 or 5%. I think we're about 4% away right here. And the odds are not great that this intermediate cycle is going to bust through this and, uh, you know, uh, and produce a sustained breakout. I think we're probably going to have to wait for the next intermediate cycle before that can happen. So my expectation was that we would, test this, but we're probably not going to break out above this. We might marginally break above this, but I don't think we're going to get a sustained breakout during this intermediate cycle. Um, and we've got a few warning signs already. Sentiment is starting to get excessively bullish, and actually has been for almost 2 months now. So that's a long time for sentiment to stay overly bullish, and we're probably going to reach an exhaustion stage here, where anybody that was going to buy has bought, and then we'll have to have a correction. So I'm going to guess maybe not a lot of upside right here. So one could keep pressing the upside, and maybe hope for a full test of these all-time highs at about 2940, or you could just say close enough and be happy with the gains that you've made, and just wait for the next intermediate cycle low before you start buying back. That's my recommendation to my subscribers at the moment. We made a ton of money on our oil trade, and we're pretty close here on the S&P, and I'm going to show you the semis next. Um, there may still be a little bit more upside to go here, but probably not a whole lot, and it may not be worth trying to catch those last few percentage points, especially if it comes up a little bit short of your target, and then we start the intermediate decline, and you get caught holding the bag. Um, you just get a little bit too greedy, and then you get caught at the top, and then you have to weather another intermediate correction. So now let me switch over to the semis. All right, so here's the longer term chart of the semiconductor index. This is the leading index. This is being driven, in my opinion, by the advances in artificial intelligence. I think there's going to be huge potential in this sector over the next 10 or 15 years as artificial intelligence is integrated into human society. But again, same thing. There was never really much chance that we're going to get a sustained breakout above this level during the first intermediate cycle out of this, what I think is a 4-year cycle low. So we came pretty close to testing that. Again, there might be some more upside. We may get a full test, maybe even a marginal breakout above this high, but I think it's unlikely that we are going to go through this level and then we're off to the races to the upside. I think we're going to have another intermediate degree correction, something that's going to retrace maybe 38 to 50% of this rally, catch a breath and then rebuild momentum, and then I think the next intermediate cycle we could get a breakout. But I don't think there's any realistic chance of a sustained breakout during this intermediate cycle. So another headwind that the market has got in front of it. Just a big resistance zone for this leading semiconductor index, and I don't expect the semis are going to get through that. So another red flag, so to speak. And we've got several sectors, the banks, the small caps, I believe the mid caps, that have all produced failed daily cycles. And that just means that prices dropped below this daily cycle low. So you can see that the banks rallied out of this daily cycle low here and then came down and broke below that. So they've made a lower low. And if 3 sectors are already making lower lows, I think it's probably going to drag on the general market, and the general market will probably follow these sectors down as well. So another caution. There just may not be a whole lot of upside left in the stock market, and it's probably just time to control greed and be happy with the profits that you've got. And this is the sector where we made our gains. We got in right in here a couple days after the bottom, and we've been holding this position until just recently. And we, again, we got close enough. I was expecting a test of the 200-day moving average, and we may still get there, but there's just not enough profit potential left, and this daily cycle has become very mature. Just not enough percentage points left right here to keep pressing this trade, trying to catch every last penny. We made over 80% on this trade, and at some point there's going to be a corrective move. Maybe we come back down to $55, or maybe even back down to $50. But there's going to be a corrective move, something that can be identified as a daily cycle decline, and that'll be the buying opportunity, not trying to catch the last dollar or two of this rally. It just becomes dangerous, and you risk getting caught when this cycle tops. Better to just be happy with the gains, wait for the correction, and then try and buy back again at the bottom of the correction. So probably not a lot of potential left in the energy market at this point either. All right, and then moving on finally to gold. I think gold is ready to start the C wave decline. I mentioned this in previous videos that intermediate declines in gold, they almost always have form as a 3-wave pattern, and I think that's what we've got coming here. This is the A wave down. We've got what looks like a bear flag here, and I think we are starting the C wave down. I'm not looking for an especially deep and sharp correction during this intermediate cycle. Maybe we test this 200-day moving average, but I think we're finally going to break out of this basing pattern. And let me widen this chart a bit. All right, so ever since we had the baby bull rally, you can see we've just been stuck kind of in this sideways basing pattern. But this intermediate bottom is different than the other bottoms, which tend to be these V-shaped rallies. This was a rounded bottom. I think this is going to turn out to be a cup and handle bottoming pattern, and we're forming, I believe, the handle right now. downside target, maybe back to the 1250, 1260 zone. So I don't think this has to be an especially deep correction. Um, so I think this is where the opportunity is brewing, but we still got probably, well, the daily cycles on day 16, they tend to run 35 to 50 days on average, but I kind of think this cycle is going to be a little bit shorter, this particular daily cycle. So I'm going to say we've got maybe two to three more weeks for gold to grind down and complete this intermediate decline. And then this, I think, is going to be your opportunity, the next really good opportunity. Uh, so I think traders that are a little bit patient and wait for gold to complete this C wave decline and this intermediate decline, I think 2019 we're finally going to break out of this basing pattern and get a move above 1400. And I think this cup and handle pattern is the springboard that's going to send gold through this resistance zone and finally break out of this frustrating basing pattern that gold has been in for the last 3 years. So just a little bit of patience over the next week or two, and then I think this is where the next good opportunity is going to be.